All right, so in today's update, we're going to talk about some filtering analysis I've done based on some ideas from the membership. And this next analysis bullet is related to the user-defined strategies, in that we're going to look at the impact of the different categories of data that we're using to create the model. And this comes about as a result of both an issue we're having where some people are they're not getting the same signals as I am, and it's not just a delivery issue. And then also as a result of some changes that I need to make, because I realized as I was building this user-defined strategies that the model has built into it assumptions that the chart is a range bar chart. Okay, so let's go over that and we'll see where we're at. Let me stop this here. We'll get to this in a minute. So let's start with this here. Now, actually, let me bring up this. Is this M? Yeah. So let's look at this is Friday's action here. So this is a good example of something that we're seeing in the more volatile market. You'll get a break lower, or like a failed, it's usually some kind of failure, so like a failed pullback, but you just get crushed. In other words, the signal is long, but the bar is down. It's a short bar, or the bar is long and the signal is down. And so one of the members, Jim, I'm not sure if you're in the room today or right now, but he had mentioned, you know, how you're using like a verification bar, which is looking for a bar in the direction of the trade. And I kind of like that idea. And so what I did is I built a spreadsheet, a version of the spreadsheet that implements that. So it requires that the next bar be in the direction of the signal. All right, so like this would get skipped. And in fact, this is actually a test run of that. So this 151, instead of taking a long there, it just gets skipped because the next bar is a down bar. Same thing on the next one. Same thing on the next one. So this one here, that's a 102. That says get long, but the next bar is a down bar, so we don't bother. And so the question is, okay, well, that's an interesting idea, and you can see that on this particular day that would save you some grief. But how does it play out over a longer period of time? All right, and so I did some analysis on that. All right, and I broke it up into two separate time periods because of the very clear demarcation on February 2nd when the markets went berserk. All right, so what we have on the left here, all right, is sort of our baseline. It's our baseline Rev 55 model with a noise filter of 4 on the 1207 model, and for this, you know, for the period starting on the December 8th. Okay. And what that shows is that, you know, this is the running P&L in column C here. And it shows, you know, at the end, December was a tough month. And then you kill it in January through the 2nd. Okay. And we stop at the 2nd because after this is when it just got crazy, and we use a different model here. Okay. So this is our baseline from which to compare. You got to be able to beat that or be better in some way. All right. And so what I did is, this is a noise filter of 4. What I did is I went, okay, noise filter of 0, but use this verification bar idea. Okay. And that's what this shows. All right, so it's worse, a little bit worse in December, and a lot worse through January. So it's keeping you out of more cases than it's helping you. All right, we're going to come back to this in a minute, because the other choice would be we'll just do both. Right, use a noise filter of 4 and a verification bar, and so that is right here. NF4 verify. Okay, and so what it shows is it's actually better in December. In general, December was a tough month for all the models. They all struggled to just break even. All right, and then in January we do a little bit better than the verification only. So the conclusion that I would draw from this is that in normal markets where the overnight range is on generally speaking less than 40 points, the standard noise filter mechanism we're using is acceptable. Okay. The other thing to look at would be the nature of the max loss days. I'd be willing to make less if it meant I could avoid these large blocks of max loss days. So here's the red. The red just means less than 0. Generally speaking, it's a max loss day, and generally speaking, it's 3 or 4 trades and you're out. So what'll happen is you just get you get taken up pretty quickly and you're done. That's kind of the nature of how it works out. If you look at the number of trades on these days, that's up here. Let's freeze that. You'll see that in generally speaking, you're getting whacked pretty quickly. On the days that are fairly volatile, you'll have some where you get more trades, but for the most part, you're just getting whacked pretty quick. We can't look down here. This down here is super volatile time, so we got to stay above. We got to stay above this this line here. All right, so okay. So with that in mind, let's do the same analysis now, but for the more volatile time. Okay. So that would be using, hey Jim, using the 0202 model, and you'd like to test from starting the following Monday. February 2nd was a Friday. You'd like to do it starting on the following Monday, but that's still the H contract, and the M contract starts in early March. So I didn't do that because I don't have time to do a setup for February for the H contract and then another setup for March. So I just did March. That's what I've been doing, and so that's what this is. This over here shows. In fact, here, let's do this. These move underneath. There we go. This here, with the orange column in column C, is now the baseline. So that's noise filter of 4 using our volatile markets model. So the model where the target is T40 is 45 ticks instead of 30. Okay. Starting when the AM contract started, which is the 9th. And this is the baseline. This is the number to beat. It's pretty tough to beat this. This is pretty spectacular. All right. So let's see the impact. So what we're going to do is the same thing. Let's look at only, set the noise filter to 0 and only use a verification bar. And that is over here. That's what this is. Okay. And it's pretty close. All right. And so it's close enough that to me, this is within error bars here. And now I would go look at, well, what is the nature of the max loss days? And what I'd want to see is I'd want to avoid these blocks. Can you get away from multiple days in a row where you're just getting slammed? All right. When I look at that, this one's better. All right. I don't have data past the 18th on this one because this is a test that was run a little while ago. All right. But it's reasonable. So the idea is sound. in a more volatile market. Is I think that the conclusion that I draw from this. I know these markets are crazy here, and I have the noise. You have to keep in mind the noise filter is set to 0, which means every single signal that we get, we're not looking for cases where the market is going sideways, nothing like that. It's every single signal. If you get a bar in the direction of the trade after that signal, you take the trade. So that's a pretty good result. That's pretty interesting, I think. So let's do the same thing then. Let's put the two together and see what happens. What if I use a noise filter of 4, which I know keeps me out of trouble in a lot of cases, and then also add a verification bar. All right, so that's what this is hiding over here. So it's in the blue column now. And it's not bad. It reduces, right? This is a fairly substantial amount. Right? This is from 43 to 31, so it's $1,200. It's a lot. And when you consider that this is modeled on a $5,000 account, as a percentage, it's fairly big. All right, and the final result through the 18th, which is just the latest data I have for this, the baseline, is also less. Okay, so that's kind of what you would expect because you're adding more filters, and what it means is that it doesn't just filter out trades that lose money. It's also filtering out ones that do well. Okay, and then if you look at if you look at the nature of the max loss days, it's not demonstrably better than what you see over here. I like this much better. All right, just because you take a max loss one day and you make money the next. Basically, I think just from a human psychology standpoint, that's a better deal than these long blocks of times when you're getting whacked. All right. So, your mileage may vary here. You could use either one of these, I think. Either the noise filter of 4 or this verification idea. Putting them together, it doesn't look to me like it's an improvement. So it would be one or the other. I think there's one more thing to investigate here. And that is what it does now is exactly what I described here, where it says the next bar has to be a bar in the direction of the signal. And what I think would be worth looking at is it doesn't have to be the next bar. If the signal bar itself is in the direction of the trade, take it. All right. So in this case, you'd still filter out that one and that one, but you would take that one. Okay. Now, the other thing I noticed also is that on these cases where the signal is one direction but the bar is closing in the other, it's not unusual to see it another like for a long here. This one here, this is closing down. It's not unusual to see the next bar also a down bar, and then it goes. So you could kind of see, if you think about what we're doing here, you can see there's the possibility that you can refine the entry, that the signal is fine, but because of just the extra volatility in the market, you can refine the entry by doing what I'm describing. So those two things seem to me to be worth looking at. So changing this verification idea to be that you're looking for a bar that's in the direction of the signal, either the signal bar itself or the next bar. Okay. And then the other one would be you'll even take the next bar after that. So there's some idea. I want to think about that a little bit more, but I did see that, especially the case where you see there's a couple down bars and then you get the up bar, particularly in these on the failure modes. So a failed pullback or a failed break. So I got to think about it a little bit more, but I'd like to test that if I can find the time to do it. Jim, please stop all caps. With the noise filter, you have less max loss days. Yes, I agree with that. This is all the same moderately aggressive plus brakes. Actually, that's not true. I did include the 101 on the verification. It was kind of an accident. I didn't really mean to do it, but that's what happened. Do you know what the results would be just trading until 9 with no max loss? No, I don't, Bob. I didn't do that. Would it change the cancel if not filled function? No, I just gave it 2 bars again still. If you trained adding this rule, would you see an improvement? You can't do that. All right, that's a recursive reference, Jim. Yeah, no, you can't. You'd have to create another model. You'd have to chain them together if you wanted to do something like that. Take the output of the system and then feed it into another model that looks at the output. Plus, it's not going to work. Interesting. I'm looking at questions here. Did I get them all? Okay, so that is it for this section. So the next thing we're going to talk about is the issue that we've been dealing with for some folks is that they'll get different codes than I will. And we expect some of that to an extent because of just delivery issues. But in investigating it, there was clearly a case where the study that's using the data from this 15-second chart was not... The data is not correct in that if I reload the data for this chart and then replay, now it's right. So one of the things we do is we go, okay, well, you've got different codes than me, reload the data. And so we'll go, delete and download data and replay it. And it should be the same now, all right? Because there's no timing issue. And yet that was not the case. But if you went and you reloaded this chart also, and then did your replay, now things matched. Okay, so in real time, it's not clear to me if it's just a problem with the system being underpowered and the timing of getting both charts updating and then the communication occurring between the charts to transfer the information to calculate the study. This is the study that draws these outlines, is what we're talking about. These bright red and bright green outlines. All right, so it's not clear to me if I kind of think that it's related to lower powered systems are struggling to keep up, but I can't prove it. And I certainly have one case where like Kent's machine is certainly powerful enough, and yet he's seeing a similar issue. So, so there's some of you that are where this is an issue, and I started investigating that. And the first question I had was, well, what happens if I just take out that input data to the model creation? What happens? What's the impact of that? All right, and so that actually led to a much larger analysis of the different categories of data that we supply to the model and what are their contribution to model performance. All right, so let's look at that, and I will share those results. And basically what we ended up with was, if you'll notice on this one here, this just finished this morning, or is it still going? 3-2, it's still going. Yeah, it's still going. Let me get that off screen so it's not. You'll notice this is Rev 61. So what ended up happening is I created a series of models that used different pieces of the data, and so let's look at what those pieces are. All right, and then what the result was. All right, and then from there we'll talk about kind of what the next step is here. So the way that you can see what data is getting sent, what data the model is using, is by looking at this norm factor file, normalization factor. Okay, you can look at this file, and this actually lists the fields that are getting sent to the model, and by definition, this is the data the model's trained on. Okay, and so there's a bunch of categories here. Okay, this is a price action category. All right, so this is talking about price action. This is order flow. All right, so this is the order flow fields. This is momentum. Okay, these are wave volume. Okay, and then this is sort of like an environment, meaning where is price now in relation to something else. All right. Sometimes people will say, well, you know, you're right at the Globex high, or you're right at the Globex low, and you should behave differently because of that. What this is what these are doing are things like that. All right. So it's basically, where am I in relation to the previous peaks and valleys of the waves? Okay, so the 1, 2, 3, 4, there's 5 different categories of data. All right, and what I ended up doing this week as a result of what started with this investigation, trying to figure out how to solve that problem, is I ended up building models that have different categories of data taken out and seeing the impact of that. All right, and so actually this is sort of treated as the base, and then we add in just that, and we add in just that, and we add in just that, or actually it's really just those 3. All right, and so actually the first thing I did was I just took the bright outlines. The order flow momentum is what this, which one is it? That's not that one, the other one. This one. There it is. That's what the order flow momentum is, the one that is coming from this 15-second chart. So what we do is we're using a time-based momentum on our activity-based chart, and it actually turns out that it's really important. As soon as I take these 2 out, the model performance goes from, when you run the model using this time period, using this as the baseline, you run the model. You create the model, so you train it. It takes all night, and then the next day you run the replay for this time period, and what you get is a number that you can compare. And as soon as you take out these 2 values, the model performance just nosedives. It's terrible. Okay. All right, so it's pretty important. And the question was, well, what about the others? This is now it's I'm curious. And it turns out that if you say you put the momentum back in and you take out the order flow, you get the same lousy result. And if you put the order flow back in, so now you've got all this, and you take out the price action, it's not quite as lousy, but it's still pretty bad relative to what we have. And so in one respect, it was really gratifying for me because it meant that, okay, all the different pieces of the different kinds of data that I'm using are all important in some way. And without them, you can't get to a good answer. All right, so, yay, Shane. But what's irritating about that is that it makes it more difficult to do my longer term plan here, which is longer term. What I want is there's a single study. You put that study on the chart, and now you can do machine learning. Okay, that's the longer term goal, and that's hard to do. That's not the one I wanted. That's hard to do, just technically. All right, so if you look here, so you understand what I'm talking about, if you look here, the predict study is right there, but it's referencing data from directional push and order flow and what's called extended move reversal, but is really price action. Okay, and so what it means is I'm going to have to build in the logic that's in each of these custom studies into the predict study if I want to ever get to a point where you, the user, can just pop the predict study on and off you go. And that's what I want, right? I want it easy and flexible and not so touchy. Okay. So if in order to do that, I've got to get programmers involved now, because I don't have the time to do this myself. So what it means is that there's 1, 2, 3 fairly large projects that need to be executed and tested and built and then released one by one in order to get to that point. And we got to start with directional push, which is easily the hardest. All right, because that's the one that's causing some folks a problem. All right. Okay, so that's where that stands. So to solve our real-time, potentially underpowered computer problem, I have to put this directional push capability directly into the predict study. Okay, so that's understood. That's got to get done. Let's switch now and talk about user-defined strategies. Okay, and then I got a question for the group. So when we look at, actually, let me bring that up again because I want to make sure I covered everything. Filtering we talked about. Okay, yeah, so user-defined strategy. All right, so here's the deal. The study, what needs to happen for you to use your own strategy, you've seen me testing that all week if you've been in the live trading room, is this study here, the custom study, needs to understand that there's some condition, and that when it evaluates to true, you want a prediction. Okay, that work is done and tested, and it works. All right, so we've been seeing that. I've been using this like squeeze indicator on 500 tick ES chart, and when it fires, the system correctly gives us a prediction. All right. The problem here is that the model itself has assumptions built into it that you are on a range bar chart. Okay. And so that's a problem because a lot of you, one, you don't want to use a range bar chart necessarily. All right, and two, you won't realize it, you won't think about it, and you'll end up not getting results that you would expect because you're using a tick chart, but the system is treating it like a range bar chart, and as a result, you're getting a lousy prediction. Okay, and when I dig into, well, where is that the case? Where is this assumption built in? The answer is in the price action study. Okay, so the order flow studies already understand, they already have a facility for dealing with the fact that it's not a range bar. All right, the momentum is actually coming from a time-based chart, so there's no issue there. And in fact, its value is that it's coming from a time-based chart and being applied to an activity-based chart. But the price action is not the case. The price action assumes you're using a range bar chart, and that has to be updated. All right. So there's a couple things here. If you well, actually, you know what? Let's take a minute and explain why the chart type is important. Let me go back to here. So if we look at, these are range bars here. If we look at this bar, the order flow, here's a bar, right? The order flow studies, these studies here, they look at just the edges of that bar. Okay. The concept, and this is discussed in tutorials up on the site if you want more detail, but just very quickly, the concept here is that you've seen markets trade in a range, right? And the reality is that what happens in the middle of this range is not important. What's only important is when you break out of the range. Do you see more buying or do you see more selling? So it's the edge of the range that's important. What happens at the edge is really key for what's going to happen next. All right, and so that concept is in this rational trader order flow study. The concept that the edge is more important than the middle. And so when these order flow studies run, this is TRT-order flow, when they run, we've told it, well, how much of the edge to look at, how much of the edge, and just exclude, just exclude this middle part. All right. And so for a range bar, that's easy because we know exactly how many ticks high it is. And so originally there's a setting that says how many price levels do I use in my order flow calculation. And if you go and you look at the study, TRT order flow, you'll see here's the setting, 3 price levels, which is fine if each bar has the same number of price levels, but it's not fine when each bar is of a different height. All right, so if you're using like a tick chart, your bars will be like that. They won't be the same height. And so if you use just X number of price levels, you're not getting a representation of what's happening, sort of at the edge of this bar. That's not the same across all the bars. You're getting, here, three price levels is not very, is not here. 3 price levels is not very much, but here it's the whole bar. Okay, so to deal with that, I updated that study some time ago such that you supply a percentage value instead of a number of price levels value. Okay, and so that's what, when you look in here, TRT order flow, it says levels mode, fixed or percentage. And if you choose percentage, well then this percent value here becomes important. And that would be sort of a normal number. give me the top third and bottom third of the bar. And so if you do this, then what the system does is it looks at the top third of each bar. So for a bigger bar, that's going to be more, and that's how it calculates order flow. All right, so that's been done, but the price action hasn't. The price action is the logic in there assumes it's a range bar chart, and that's got to get fixed. I never changed that, and so really what this is looking at the way the market is ebbing and flowing is what it's doing. The way the market is ebbing and flowing. So it's looking at how the, like this, if there's a level down here, there's a level right there. It's looking at the fact that that level got tested here, but you didn't go lower. All right, in a very specific way, it's doing that. But the code assumes that it's a range bar, and that it's got to get fixed. All right, so so there's a couple things there that need to happen here. So this is the decision that the group's got to make here, because I can't release user-defined strategies, or rather, if I release a user-defined strategy right now, you have to use it on a range bar chart because the model assumes range bars. If you use it on anything else, you're going to get an unknown prediction. All right. Until I fix this. Once I fix this code, then you'd be able to use user-defined strategies on. I'd be able to build a model that's generic enough that you could use on a tick chart or volume chart or whatever you wanted, basically. Okay. So that fix has to get made. So you can see that you can see the conflict. There's a fix that needs to be made that incorporates the momentum data into the predict study, okay, which is also part of the longer strategy to get all three of these into the predict study, okay. So currently all these down here are already in the predict study. So we're gonna get to a point where every single one of these values is in the predict study, and then it becomes very easy to use, right? So we already have an action where we need to get the order flow momentum fields into the predict study to deal with this issue that some people are having related to the information not transferring across quickly enough. All right, I also need to fix the logic in the price action so that you can use it for a user-defined strategy. And the question is, well, which one's more important? Which one's higher priority? Okay. So three things need to happen, or actually four. This has got to get fixed. The price action's got to get fixed so that it can use, or enhanced. It's not broken. It was never designed to work to do this, but it needs to be changed so that it can work properly on non-range bar charts. Okay, and then each of these pieces, 1, 2, 3, need to get added into the predict study. Okay. So that's what needs to happen. And the question is, from a community perspective, what's the priority? All right. So that's what we need to have a discussion about. Hey, Larry. Larry, let's wait to the end to answer your question because that's going to take us off topic here. I understand, Chris. So the people that are struggling with this issue are very, very clearly we got to get this momentum into the study. Okay, all right. I completely understand that, Kent. Others are like, hey, give me a user-defined study. All right. So Bill, the Renko bar is not fixed like you seem to think. Okay. The Renko bar is actually a really tricky little bar because a Renko bar has data in it that's outside of those little boundaries that you see. A Renko bar is more like a more like a tick chart than it is a range bar chart. I'm looking at questions, gang, or comments. Okay, I actually think that so I actually think there's a relatively simple solution. It's the resources that are required to fix this logic and to do the momentum are the same. So that's why there's a priority call there. Producing the server that you can use for a user-defined strategy with a range bar chart, that's my resource. I can do that. All right. So I think what I'm hearing is go ahead and release the user-defined strategy server, and then we'll just it'll with the caveat that there's right now you really have to use that with a range bar chart, or you're not going to get the results you think you are. All right, or rather, you're not going to get correct results because the predictions won't be right. But then right behind that, get the programmer fixing this problem. Now, it actually, the more I think about it here, it actually becomes very easy because I can release user-defined strategies myself. I don't need a programmer for that. Or rather, the programmer work's already done. The rest, the work to release that is on the server side, which I own. And this fix is actually pretty simple. The fix to price action is not a difficult fix. The programmer will spend more time just coming back up to speed on the code than he will implementing the fix. All right. So I think the thing to do here is get him working on this. Assuming his availability, that won't take more than a few days, and then get to work on the much more difficult integration of order flow momentum. This one is going to take his time and my time because there's going to be a lot of testing here. The reason this is so difficult is this study is on a certain chart type, and what we're saying is I want you to, in memory, in the background, open up another chart and manage it yourself instead of just kind of looking over here. And that's what happens now, is this chart is doing a bunch of work, and then this chart just says, hey, give me the result of your work. All right. Whereas now what we're saying is this work here has to be done inside the study, which means we have to do all of it. All right. It's a big deal. All right. All right. So I can see that, which means the actual delay to the people that need the price order is only a few days, actually, because this will not take that long. The price action piece won't take that long for this programmer to do, but this is going to take some time, though I don't exactly know how long. I've got to work through that with him. Okay. And now let me read questions here. Understood, Philip. I agree with you. Okay, so Michael has an interesting question. He says, I thought the basic premise of trading with order flow is that we are using range bar charts. Why are we now looking at different chart types? My particular view of order flow has been built on range bar charts, but order flow itself has nothing to do with any particular chart type. Order flow is the speed with which the orders are transacting in the market, and the direction and the nature of the transaction, whether it's bid volume or ask volume. Okay, that's sort of independent of how you decide to plot that. I've just always done range bar charts because it's a very clean way to look at it. But lots of people don't like that. They want to look at it in a different way, and I don't have a problem with that. But to do it, I got to fix this price action study, because this price action study assumes range bars. My view is not changing, Michael. What I'm doing is I'm opening up machine learning predictions to any user-defined strategy. That's what I'm doing. I'm not using it per se. I'm just doing what I'm doing. I may discover that bonds need that kind of approach, because range bars don't work that well for bonds. I don't know. Shouldn't your method be the foundation and that's what you build first? Yeah, that's a fair statement. I don't have any comments on. So Larry's asking, what do I think about the particular strategies that I've used? I haven't tested anything specific. I'm just mechanically, does it work as expected? And then the whole idea is that you release that into the wild, and then the community comes back with, hey, this strategy works really well, or this strategy doesn't work very well, stay away from it, et cetera, et cetera, et cetera. So it basically, what it does is it opens up the strategy, the trading strategy, to the crowd. So we're crowdsourcing trading strategies with machine learning. So the immediate value is maybe nothing, but the long-term value is potentially enormous if you get lots of different ideas all combining together. Okay, so that's my motivation for doing that, is a way to give you the ability to look at the chart you want to look at and still get a machine learning prediction on it. Okay, that's my motivation. That doesn't mean I'll do it. But what I will be able to do is take that and test it. I'll be able to run a replay on it, and so will you. So what we talked about last week, or maybe it was the week before, was by doing this, we can also then create a sort of a community download section where people say, look, here's a strategy that I like that I'm using, and make it available for other members to go look at and pursue and vet and enhance. Okay, so this concept is intended to put machine learning in your hands, not tied to any particular behavior that I see. Okay, now what's interesting is that if the markets hadn't gone so berserk, we probably wouldn't be having this conversation right now, because the system itself behaves very, very well and cleanly when the markets aren't absolutely nuts. But as we we're looking at how do I deal with all this volatility, all these ideas popped up on what to do, and it became clear that, hey, you know what, it's not that difficult to make this available to anybody using any chart. Okay, and it maybe not. It may not be a fair statement, because you have your own way of looking at the market, and you want to keep doing that. And so what I see when people send me screenshots and things, what I see is they've taken my charts and then added stuff into them so that they can see what they want to see or what they're used to seeing. All right. In any case, my conclusion on what to do is, Shane, go ahead and work to get user-defined strategies out, and just make sure that it's clear that you need to use a range bar chart right now, and then simultaneously get the programmer working on these two items. Okay, so one of these is pretty simple, and he should be able to just bang it out fairly quick. So if I can get the price action done, then I can give you models that you can use on any chart type. Actually, the model will be the same. It's just that your chart will now produce the data correctly for the prediction. That's actually what's going on here. And then in the meantime, this much more difficult problem we can get to work on. Okay, so that's what I see. That's what I'm planning on doing here. Now, while I wait for other questions or comments to come in, Larry was asking, the other Larry, not the Larry in Hawaii. So Larry, you're basically kind of behind the curve here. The best thing to do would go look at last week's update, and I can send you the link, or I can show you how to get to it real quick and watch that. It's an hour long, and that will get you up to speed pretty quickly. All right. What we've been doing is working to deal with the volatility and what needs to happen, and so a lot of analysis was done and then discussed last week with some guidelines. I don't want to send a link out to everybody. You guys you should be self-sufficient here, because everything's uploaded. So just go to this. Let me show you how to do it. Okay. Just go to YouTube. Let's just do it together here. Okay. Go to YouTube and type in the Rational Trader. All right. And that's going to get you here. All right. This is me right there, the Rational Trader. Click on that. And now go to playlists. So every video I do gets uploaded. This one here we're talking right now is being recorded. It'll be uploaded in this evening. Go to playlists, and in playlists there's the daily videos. All right, and then there's this artificial intelligence and machine learning playlist. This is the playlist you want for these discussions. Okay, and if you go into here, you can see in the list on the left here, on the right. All right, they're all listed and they're all dated. All right, so here's last week's. I guess it's not, the date's not in the title. And then the one before that. So for Larry, the Larry that's not in Hawaii, you want to watch the last two, actually. The overview and roadmap, and then the volatility discussion from last week. Okay. And this is everything's here. It'll always, this is where it'll always be now. So anybody can get to it. Okay, will the models for next week include the extra confirmation bar, or will that be defined in the spreadsheet? Okay, so I should have asked this question as well. Thank you, Larry. The other Larry. Aloha, Larry. So the spreadsheet for this week has been updated in general. Okay, what I did is, and I'm curious if this helps Kent and Robert also, because on just the general issue that you guys are having with the directional push study. What I did is I changed this study, or the spreadsheet study, so that it is all referencing the studies themselves and not the cells and columns. So it's a lot less touchy now. If you move stuff around in the study list, it won't matter. You can do that now. Just don't remove it from the study list. But now you can move it around and it'll still work. Whereas before, any movement at all totally screwed it up. Okay, so that's been fixed using the functionality that the Sierra chart guys just released, like in February. So if you'll notice, if you look up here, it doesn't say like $AC3 anymore. It says ID9.SG1. Okay, in other words, the study itself. And so everywhere where a study, data from a study is referenced, it now uses this syntax. So it doesn't, it's not looking at a cell anymore. It's looking at the actual wherever the study happens to be in the spreadsheet. So that's coming out. I can also release this verify spreadsheet for all the markets, because this verification concept is implemented in the spreadsheet. All right, so it's the spreadsheet that decides whether to take the trade. And so, the 151 here is coming from the predict study, and the spreadsheet goes, okay, should I take a trade or not? And so I can release a version of the spreadsheet that has this verification code in it, and so you can use it if you like, or you can see how it's done so that you can then tweak it. All right, so I will do that. Okay, and what will happen is the default chart books that are uploaded will have the normal spreadsheet in it that has been modified to reference the study and not the cell. And there'll be an additional .scss file that has the word verify in it. So you can use that if you want to implement this verification. Okay. I'm looking at a long question from Bill. Hang on. All right. So that's what I'm. The other thing this is a little confusing. I'm sorry. I didn't complete the thought here. So for the folks that are struggling with what might be processing power issues in getting the signals, the spreadsheet itself has been reduced in size and complexity. Okay, so Kent and Robert, I'm very curious to see if you see a difference next week once you get this, because the spreadsheet is one of the slowest things in the system. And so what I did is I took out everything that's absolutely not necessary, and then I reduced the number of cells too. This used to go to 1,000. Now it says, it should say just 100 or 200. Maybe it's not on this one. Maybe that's the other one. Yeah, just 200 rows. And so I'm curious to see if that helps. So there's a lot less columns, and now there's less rows, and that means there's less calculation going on, and we'll see if that helps you guys or not. Okay, so you're going to get 2 spreadsheets per market, and if you just download if you just install the chart book, you're going to get what you've been getting in terms of functionality. If you want to use the verify spreadsheet, you're going to have to tell the system to switch to that, and the way that you do that is you go into the spreadsheet study itself, and then you change it down here by selecting it. Okay, so there's a little select button down here. Which spreadsheet should I use for this spreadsheet study? All right, and you select it. Select the one that says verify in it. Okay, so that's what's going to happen. Now, Bill's question. So, Bill, you are correct. I think there's another piece that you're missing here. With the user-defined strategy, you'll be able to tell the system as long as you can evaluate a condition to true or false, give me a prediction on this bar. Not get long or get short on this bar. It's give me a prediction on this bar. Okay, that prediction will be get long, get short, do nothing. And how you respond to that is up to you. If you're expecting this behavior to be a long and your prediction is short, you got to decide what you're going to do about that. Okay, maybe you exclude it, maybe you go for it. I don't know. It depends on what you're doing. Okay. In order to make that work, the chart, you have to remember now, the model is trained on data. And then you're giving the machine learning system data that it compares against the model, or it runs it through the network, and then what comes out is here's the closest match to this data. All right, but if the data you're giving it is bad, you're not going to get a good prediction. And so right now, the price action data assumes you're using a range bar chart. And so this study right here, this price action study, is not calculating correctly if it's a tick chart. So you'll get a prediction. It's just that the data you're giving the system to predict on is bad. And so we got to fix that, or it's not going to work. All right. So the problem is not that I don't have to change anything in my modeling, but we have to fix this case where when we send the data to the model for a prediction, it needs to understand that, how do I calculate the price action when it's not a range bar, basically. Okay. So Michael, it's not difficult. So Michael's asking, well, hey, if I have a strategy that is a long, and if I get a prediction short, I want to ignore it. What do I do? There's like 3 or 4 different ways to implement that. It's very easy. We can go over it. The simplest way is put it in the logic here. All right, this says if my code is a long, get long. So you could say if my strategy is a long and the code is a long, get long, as opposed to, yeah, okay. You could also go only put the long codes in your list, and now you'll only get long. Okay, and do it on 2 different charts. That would be another way to do it. We'll probably need some tutorials on how to approach that. And to do that, I probably need someone to give me something that they're working on or they'd like to do as an actual use case, and then I can build some tutorials around. Okay, how would you do these different things? Okay. All right. So what's going to happen here is tomorrow you're going to get the models for this week, just like you do normally. You may or may not get a new chart book that has a new spreadsheet studies in it. It depends on if I have time to do that. But next week you'll get new chart books that have a more efficient spreadsheet in it, and a spreadsheet that implements this verification idea. Okay, and then also next week I'll release probably later. It might be the end of next week. It might be next weekend. I'll release the server and the DLL that implements user-defined strategies. I'm a little concerned because I've been running the user-defined strategies in a test mode. I haven't run it on the right here in my training live with it, and I don't like to release something unless I've been doing it live. So I feel like I need to do that for a few days before I release it. Okay. And I don't understand the context of your comment, Larry, but okay, so when the DLL updates, Randy, that's transparent to you. It'll automatically download. So you don't actually, that's not true. You will get a message from me that says, hey, update Sierra chart, because you may need a later version. That's a good point. But the DLL is not changing yet. All right, it'll be next week. So you'll have a couple of days. It's really simple, actually. If you launch the system and you go into here, you go into here, and it says it doesn't say ML predict. It says custom study. Go update your Sierra chart. That's what that means. Okay. All right. So I've got my action plan. That's it for today, and then we'll execute this. What I'll do is, for those of you that are basically stuck because of the issue that you're having with this bid-ask chart and getting the data across, I need to get an update I need to get an estimate from the programmer on what's involved and how long that'll take, and I'll let you know what that is. Okay, so I'll send a message out to everybody. So you have some sense of, okay, that's a few days, it's a few weeks, or whatever it is. Okay. It's unlikely it's more than a few weeks. All right. It's non-trivial. Some things are like, no problem. Like the user-defined strategy turned out to be really easy to do from a programming perspective, but this one I know is hard. So I need to get him to look at that. So that means basically I got to spec it first and then give it to him. Larry, I think you're conflating two different things. We'll have to discuss that separately. Okay. All right, gang. That's it for today. I appreciate the feedback, and I will get to work here on the next steps.